Well, hello everyone and welcome to Moementum channel. My name is Mo and today we are going to be talking about two undervalued healthcare stocks that are perfect for dividend investors to look into and add to their portfolio right now. So let's get into it. The very first company to review and get into is called Baxter International. This company is traded on New York Stock Exchange with ticker symbol BAX. Baxter International develops and provides a portfolio of healthcare products worldwide, and the company offers dialysis and hemodialysis and additional dialysis therapies and services, renal replacement therapies, and other organ support therapies, focusing in the intensive care unit, among others. The company Baxter International was founded in 1931 and is headquartered in Deerfield, Illinois. You'll notice that Baxter International has a dividend safety score of 82, making it a very safe dividend payer. Their dividend yield currently is at 1.30%, and the last time that they increased their dividend was in May of 2021, whereby they increased it by 14%, making it a very fast dividend increase. Company has $43.2 billion in market cap, making it a large cap company, and the stock has a low volatility score of only 0.35. Beta is a measure of volatility, and a company with a beta of under 1 suggests that their stock price is less volatile than the overall stock market. Looking at additional metrics from a dividend safety perspective, the payout ratio for Baxter International is at 31%, and their forward payout ratio is only at 27%, both of which being low or very low for most companies, giving the company a ton of room for increasing its dividend for the years to come. The company has been paying its dividend uninterrupted for the past 4 years, and in all those 4 years, they've increased their dividend. During the recession of 2007-2009, it's worthwhile mentioning that the sales for Baxter International remained almost flat, and their stock was only down by 6%. Looking at the dividend frequency, company does pay its dividend on a quarterly basis in the months of January, April, July, and October, and they currently have an annual payout of $1.12. In terms of valuation, Baxter International current dividend yield of 1.30 is about 21% above their 5-year average of 1.07, indicating that now could be a reasonable time to invest, unless you believe that company's outlook has weakened. Furthermore, their forward price to earnings ratio of 20.3 is below their own 5-year average of 24.1. In other words, the stock looks cheap compared to how the market has valued it in recent years. If you look at the 52-week price range for Baxter International, it is hovering closer to its 52-week high price, which was at $88.01. The 52-week low price for Baxter International was at $73.77. Looking at a number of additional financial metrics to better assess the stock, the earnings per share, it's a measure whereby we'd like to see it consistently growing. In the year 2015, the company had a huge decline in its earnings per share. In fact, that year, they reported 72% drop in their earnings per share. But from there on, they've kind of recovered. And in the last 12 months, they reported $3.38 of earnings per share. And the next 12 months, it is projected to have $4.22, which shows an increase of 25%. In terms of the number of outstanding shares, we'd like to see the company that has its number of outstanding shares declining over time. In this case, for Baxter, the last 12 months is 511 million outstanding shares, which is the lowest in the past 10 years. Next, we're going to take a look at the total sales or revenue for the company. And ideally, we'd like to see this number growing steadily over time. Since 2013, we see kind of that pattern, with the exception of 2014, which was a little bit of anomaly. In the last 12 months, we are seeing $12.5 billion in total sales, which is the highest amount since 2013. Return on equity is the last metric to look at. Ideally, you'd like to see 10% or above for the companies. And in this case, the last 12 months, the return on equity for Baxter International is showing to be at 14%. Next, let us take a look at the stock price and the stock return for Baxter International, how it's done the past 1 year as well as the past 5 years. You notice for the past 1 year, the stock was up by 7.30%. And the past 5 years, the stock was up by a massive 85.79%, which is just a remarkable return in the 5-year time frame. Baxter International has a price target of $100.86 based on 7 analysts covering the stock on TipRanks, with all of them have a buy rating for the stock. If that holds true, it gives the stock an upside of 17.43% at this time. Analysts on Yahoo Finance give the stock a $97.80 price target in 1 year. And lastly, analysts on Simply Wall Street, assessing the fair valuation for the stock, give the stock a fair value of $134.76. That suggests the stock is undervalued from a fair valuation perspective by 36.3%. That was our first undervalued healthcare stock to look at. Before we move on to look at our second undervalued stock, I have a big favor to ask you. I put a ton of time and effort to put this video together, and I really appreciate if you can give this video a thumbs up and subscribe to our channel for more videos. All right, let's get into our second undervalued stock. The second undervalued stock to review is Bristol Myers. It is one of the S&P 500 companies, and it is headquartered in New York. It's a major pharmaceutical companies. Bristol Myers does pay a dividend currently yielding 3.34% and has a dividend safety score of 79, making it a safe dividend payer. They increased their dividend last time in December of 2021 by 10%, making it a fast dividend increase. The stock is traded on New York Stock Exchange with ticker symbol BMY and has a beta of 0.39, which is very low volatility overall compared to the overall stock market. Bristol Myers has a market capitalization of $145 billion, making it a mega cap company. In terms of the dividend key metrics, the payout ratio for Bristol Myers is at 27%, which is low for biotechs, and their forward payout ratio is also low at 28%. During the recession of 2007-2009, Bristol Myers was actually down by 32% in terms of the stock price, which is better than that of S&P 500, where it was down by 55%. In terms of their sales, it was down by 20.9%. Again, it is below average compared to other companies that had their sales dropped much more during those time frames. Looking at the dividend history, the company has paid its dividend uninterrupted for 30 years, of which the past 14 years they've increased their dividend year after year. They do pay their dividend on a quarterly basis, and their annual payout currently is at $2.16 per share. Looking at the valuation for Bristol Myers, their current dividend yield of 3.34% is 12% above their 5-year average of 2.98, suggesting the stock may be undervalued. Looking at their forward price to earnings ratio, it is at 8.3, which is a lot less than that of the healthcare sector. And on top of that, it is well below their own 5-year average of 11.2, suggesting that investors may have become pessimistic about this stock. That's why we're going to take a look at a number of other financial metrics to see what is the rationale behind it and is there any justification why it seems to be the case. Earnings per share is really promising. If you look at it since 2011 all the way until 2020, they are showing that kind of nice rebound and growth. In last 12 months, they have reported $7.13 in earnings per share, which is remarkable. And the next 12 months, even better, $7.80. So no concern whatsoever there in terms of earnings per share. Outstanding shares, we'd like to see the company declining. We saw that in 2020, they issued new shares, and the last 12 months, they're showing 2.23 billion outstanding shares. So a little bit of red flag there. In terms of the total sales, we see a similar story to earnings per share, a positive story. The last 12 months, they have reported $45.5 billion in total sales, which is almost double that of what they have reported in 2011. That's really nice to see the company increasing its revenue so rapidly. Lastly, return on equity is where another red flag comes up. While we would like to see 25% return on equity or better for biotech companies, you notice that in 2019, 2020, and in fact in the last 12 months, they are showing not so ideal return on equity. In fact, in the last 12 months, they're showing a negative return on equity, which is not ideal. In terms of the stock return, the Bristol Myers stock was down 2.15% over the span of the past 1 year. And in the past 5 years, the stock is up 31.22%. Looking at analysts covering the stock, there are 11 analysts cover Bristol Myers in tip ranks. 6 of them have a buy rating, 5 of them have a hold rating, giving the stock a moderate buy, with the upside only at 4.69%, given the average price target of $67.63. Though the high price target by analysts is at $75 and the low range is at $58. Analysts on Yahoo Finance have a more positive outlook for the stock, with a 1-year price target of $72.03. And lastly, analysts on Simply Wall Street assessed the fair valuation for the stock at $187.84, suggesting the stock is undervalued by 65.5%. Well, there you have it, folks. A quick look into two undervalued dividend-paying stocks in the healthcare sector. I hope you found this video beneficial and gained something of value from it. We try to explain the different metrics that we use and how we kind of analyze them to coming to our decision around whether these are good companies to invest in or not. If you found this video beneficial, don't forget to give this video a thumbs up and please subscribe to our channel. Here on Moementum Finance, we post every week several videos about investing, whether it's investing in the stock market, real estate, as well as cryptocurrencies, including ways to reach financial freedom. Thank you, and I hope to see you next time.